sharing their strategies, answering our questions. I mean, I profusely thank them. I appreciate their time, spending their time with us. I would like to hand over a small gift to each of them. Deepak Chinoy. And the surprising, the nice part was yesterday was the first day I had met Deepak, and I'm very glad that he accepted my request to speak at the event. So you could get out of it if required, is it?
I did not get out of it because I promised to go.
Oh, good. Thank you very much. Thanks a lot. Really nice. Yeah. Yeah. Kora Reddy. Thanks, Kora. In fact, there's somebody from Surat who wanted to have a word with you if the time, probably 5 minutes offline. If you're. Thanks, Kora. I have two questions here. How many of you are staying for dinner tonight? Can you raise your hands? We need to keep those numbers. Count ಮಾಡ್ಕೊಳ್ತೇವೆ. Sorry? 8 to 8 regular, the standard dinner time. The session goes on till it'll go on late, actually. It'll go on late. How many people are having dinner here at the venue today? Okay. Okay. Can you please put your hands down, please? People are not having dinner at the venue today. Huh? Yeah, thank you. And how many people are staying back for tomorrow's brainstorming sessions? For tomorrow, 28th, Sunday. 1 more. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 16 is the note. 18. Alli. 18. 30? Okay. Okay. Yeah, in fact, Sriram gave one more piece of advice which turned out to be prophetically true. I don't know if that's the right word, but under the circumstances, I thought it was true because he said, last minute there will be registrations and people will come and register at the venue. I said, Sriram, you're not so popular that people will come to the venue and just rush in, we'll have off the road registrations. It so happened it was true. About 15 people registered here. We've got cash, we'll pay here and register. So I felt happy and the stance was vindicated. Who's that? Who's that? Oh, okay. Sorry. Audience.
Logistics.
Yeah.
Who are going to airport?
Yeah.
Take care of airport.
Yeah. How many people are going to the airport today? Tonight's flights. All of tonight's flights. Okay. The reason you're doing this quickly is because if it makes sense to pool all those people going, if it's at a common time, you can go into in the same cab. Yeah. That's probably the only thing. So 3. What time are you leaving? 4 o'clock. 8 o'clock. 4 o'clock.
Airport, one person will take care.
Yeah, if you can each other and work out mutually. I'm just highlighting it here so because probably I would not be able to value add anything there. So just you can talk to them. You can talk together during the next break.
one person for airport. Let everybody.
Yeah. Vishal, can you? Yeah, you can all contact Vishal for airport. I mean, you can work out something. Yeah. And how many people are going to the railway station? Railway station and the Majestic bus stand are the same place. 1, 3, 4.
No, one person you tell them so that everybody
Good.
will contact.
Abhileaves@gmail.com. Abhijit, yeah, can you stand up, please? Yeah, yeah, railway station. Yeah, I know. Yeah, okay, right. Yeah, thanks. Else, I think Hemant, I will take care of. Okay, anybody wants to go to Yeshwantpur from here by cab? I mean, Shiva is going to Yeshwantpur by cab, so probably people can be accommodated. Which car is that? Indica. Indica, they have Manju. Okay, 3 people can be accommodated. 1, 2, 3. Yeah, yeah. Shiva is going by around 8 o'clock. 1, Mr. Padmanabha. You are. Oh yes. Hey, Vikas, smart consider. Yeah, Hemant, is it? Hemant of Whitecharts? White. Okay, that gentleman in the black t-shirt. That's it? Okay, we'll quickly get on to the next session. This is a session. Okay, I wouldn't know how to express it. Okay, one is AP is a good friend. We've interacted with him over the years. And I met him once at Pune too when I had gone there on a visit. I mean, my visit was to meet him primarily a couple of years back. He will be talking about option strategies. And the key about this particular strategy session is you can apply this strategy to all of those strategies that have been discussed in the last 1.5 days. All of the strategies, including the one Vishal is going to be talking about. Because that is a concept. That's a strategy. Here you use options to execute that strategy. So that is why the strategy of AP becomes very, very critical. Pay attention to it closely, ask your questions, and you can ask your questions online or offline depending on your 15-minute yeah, thank you. Okay, one last question. How many people want to stay tomorrow for tomorrow's brainstorming sessions and hadn't planned for it? Okay, like the registration you have done was for either the option 1 or option 2, but option 3. Option 1 was 4K, 2 was 6K, 3 is 8. 1 was 4K without stay, 6K was stay for till today. 4 wants to stay back till tomorrow and leave tomorrow evening along with food and the coming sessions. That is option 3, that was 8K. That difference needs to be paid. We need to tell the organizers about the dinner and stay arrangements if required. Sorry. Okay, you can call me offline, I'll be here. And done.
Behind? Okay, before it starts, I'll just have a quick survey. How many of you regularly trade in options? Trade in options, so many people do it regularly. How many of you are afraid of trading in options? How many of you write options regularly as a trading practice? How many of you only buy options? So it's all mixed. So it can be covered. Gujarati terminology is very widely used. Anyone, how many know this? What is the second part? 5 ka 50,000. What is the second part? Not you, not a Gujarati. Not you. 5 ka 50,000, lakh ka 12,000. That is what option trading about if not done properly. Reason?
And because of yeah,
because of losing in the past. So that I think will be the reason everyone who is trading. Any other reason? Someone doesn't know what is a call, what is a. Anyone here who doesn't know what is a call or what is a put? I've read these words somewhere. Is there anyone who hasn't read this online or in some magazine? These are famous words. These are extremely true in options, less in futures. Yeah, Warren Buffett. The reason behind it is if futures is leveraged, options are super leveraged. Just to give an example, if Nifty futures you get it for 25, 27,000 one lot. If you are buying a call option of 5,600, let's say the price is 70 premium, you get that only for 3,500. One lot of Nifty which is worth 2,85,000, which said you get it only for 3,500, depending on the strike price of course, but that is the leverage you are getting. That's why it is very dangerous. Sorry? No, it's not working properly. This is a saying in Gujarati which is used not only in stock market, anywhere. 5 ka 50 is 5,000 becomes 50,000. You know the words? 5 becomes 50. And the other way, the other half of it is lakh ka 12,000. 1 lakh becomes 12,000. Both are possible in options. I gave that as an example. Now there are two ways of trading options. One is the scientific way, which a lot of people have heard about. All the people who come on TV talk about it. I have never understood it, which is called option Greeks. I took the fundamental analysis of options, delta, IV, which is not needed. I'll tell you why, if you follow this method. The technical T method of trading in options which I use is charts of options. I'll be showing at least 23 charts of options. So that's why I call it the technical analysis method of trading in options. Now, once you decide to use charts for options, in that also there are different ways of trading in options. One is positional, in terms of number of weeks. You might be having a view of something, maybe Nifty or a stock for the whole of next month. So that is, I'm calling positional. One is swing. Swing is only a few days. And then intraday. This is how a typical options chart looks like. You can see why it is called lakh ka 12,000, 5 ka 50,000. If you see the prices here, this is from mid-August to 23rd October, 3 lakh. The price has gone from around 20 to 170 and has come back to 20. Nifty has not moved that much, but this has moved that much. Now, let's come to positional trading in options. This is something which I have read about and developed the charts in Ami Broker with from Prashant, who provided me the AFL. This chart, again, is a, you must have heard of straddles and strangles. It is also called guts, straddles, where you take the same, you take one strike price and a combination of the call and the put, addition of the call price, the put price, that is plotted as a chart, real time, live. You get the charts here, you'll see, you can see all the colors, 1, 2, 3, 4, 5, these are 5,300, 5,400, 500, 5,600, that one chart which shows all guts. So this gives a positional view of Nifty case. It doesn't work much for stocks, it works mostly for Nifty because there is a lot of liquidity in Nifty options. Now there are ways of trading this where you short a straddle, where you sell the combination of a call and a put.
whatever number of lots your money management permits. So that we won't talk about it. Let's say we are selling one call and one put combined. I'll just give you an example of a typical trade because October was a very range-bound month and this was a very classic case of what could have been done. Typically this trade is taken up a few days into expiry, like yesterday was the first day, maybe around Tuesday of a new expiry. So this is 1st of October. So in September I think expiry was whatever, 26, 27 September. So in the first week, this is data of the October guts, even before the expiry had started, even from September onwards. That's why you can see line. So around the first 2-3 days of a new settlement, you can see here that all the guts have made a new. They have given a spike. I must tell you one thing, in the first few days of a new settlement, a lot of positional players, big players, are busy writing options. That is not the real time to buy a naked call or a put, unless there is a huge positional trend started. But that is the time most of the people start taking positions of protecting their positions by writing calls or writing whichever way they are leaned. So if you look at now which gut to trade, if you see that time towards the start of the new set in October, Nifty was around 5700. We take 5700, same strike price, because if you see no reason to trade 5800 or 5300, 54. So let's take 5700. The red line is 5700. Around the 1st of October, this first 3 days of the new settlement, this is a typical hour chart. This makes a new high like all the rest, and then it's like trading in pivots in the gut, nothing else. So you mark a line here, and if you see this price, it's around 195. This will be around 220 or something like that, the top of that gut. So you have a stop loss of rupees. Once it has broken the pivot below 195, you can sell the one call and one put total, whatever price it is, as long as the total is near 195, with a stop loss of the total as 220. Since it was range, of course that time you did not know it was range bound, but then that's why the stop loss is here. Market could have just crashed up, you don't know. But since it worked, so that's why charts look very good in hindsight. In hindsight, everyone can become a millionaire. But since it has worked here immediately, so you have to trade it. What has happened here, hold it sideways, it has again crashed. You are very safe in the position. You can start trailing the gut as per the pivot, whichever. Now the stop loss can be removed, change over here, from here. And it was a completely downtrending month for the gut, because nothing happened in Nifty. Everyone was busy writing calls, writing. It closed at 5 rupees. This is updated only till 23rd October. On expiry day, Nifty was 575. So the total is only 5. From 195, whole month you did nothing, you got 5 rupees. So 190 is profit by doing nothing. Gut is shorting a straddle. Straddle is same strike price, call and put both. That is 1 minute. Yeah. That red line, I have drawn it myself. If you see, yeah. So for that I have to zoom the chart. This is a PNG file. Broker I could have zoomed it. It has, there is a lower, like a pivot which we are explaining. It has broken a pivot.
So you are looking at pivots and options.
Yes, on the gut. Yeah.
Why is it 195? Is there some?
Yeah, that's what I was answering. You see, you won't be able to see the chart from here. If you just above that line, there is a movement, and there are two lows which are formed. You can see that?
Yeah.
That is a pivot. So the line is below that, and that is a position. It's a probability. I mean, it's not a short trade, but you are looking for a trade where the risk is very less. So the risk. Here you can only look for trades which have a very low risk. That is the first thing you have to see. You are not getting the reward. You don't know it is going to expire at 5,700. Reward is, in fact, secondary at that stage. The first thing to be known is what is the risk. So you are looking for an entry. So once that top is formed at 220, whenever it breaks the pivot 195, it's a very good stop loss of only 20-25 rupees. 1 hour, yeah. Sorry? Yeah, the reason was, that is my experience, the gut straddle which you should trade is near the price of Nifty, which was at 5,700. In the first October, price was 5,700. Now this is a positional trade example of a stock. This is a monthly chart of DLF. In the last few days of September, DLF has gone up sharply. I don't have the daily chart, but monthly chart. In the last few days of September, it went up sharply. Now this is only a probability that the trade will succeed. There is no confirmation. It is not a trend trade. It is a trade in anticipation with a very low risk. That's why I am saying you can take such trading options because the risk is very less, well defined. In the first few days of October, DLF did not do much, but it went to the high of September, 245, 244 point something, 44.7, and it was a double top on a monthly chart. So a double top on a monthly chart is a good trade, contrarian trade, although the trend was not there, trend, but it was a good trade to take because the risk was very less, stock was very clear, 245 cash. You can easily buy a put of strike price 240 or 230 because it's very beginning of the month. You have the full month, so time decay is not the criteria. This is the chart of the DLF put of that month, October. This is another the entry pattern which I want to explain here. In October, when DLF made top of 244.7, can you see this bottom over here? Everyone can see this? Do you see something different over here, which is something strange? How many of you know the oops buy or Larry Williams? That's an oops buy in the put chart. On the 5th of October, no, this is not hourly chart, 1 minute. Yeah, this is an hourly chart, yeah. In the first half an hour, 15 minutes, the put of, this is 230 put. I think same pattern was there, 240, 220, all strike prices. It gapped down. There was a downtrend in the put because at that time DLF was trending upwards towards 245. On 5th October, DLF made the top of 244.7. That day the put made a opened gap down here around 3 rupees. This is 0 to 5. I must tell you one thing, in options, the trades which you take in anticipation with some intelligent logic work better than the actual trend following which the other people explained. Here you get an early entry, the risk is very less. That is most important in option. So here the put gap down near 3 and started going up because DLF made a top at 244 and started coming down. That was the same day of the MK crash, flash crash. But I must tell you one thing, that on that day there was no news of Kejriwal, nothing about DLF, Robert Whether, nothing. So it's not trading on any news. No, what is going, there was no news at all. But since this is an oops buy in the put, it was worth the risk. The stop loss was below the low, which was a couple of rupees. So DLF, there are two patterns. One was a monthly double top, which is too early, but there was a pattern. The oops buy in the put, so risk was the low, which is around 3 rupees. If you get an entry around 4 or 5, risk is only 2 or 3 rupees. That's all. So lot till that time was 2000. So you have a risk of 3,000, 4,000 rupees. After that, the news came and then DLF started crashing. It went to 30. So it was a successful trade again in hindsight it looks very good, but the entry parameters are more important. After that what happened, then the news started coming out, Kejriwal, Robert Vadera, then there was no need to trail it, it was always going to be weak that month. Similar pattern was observed on the same day in a Nifty put, in fact almost all. This is a 5,800 put. In fact, everything, almost all stocks, all Nifty puts gave this pattern on that day, 5th October, when the whole world was bullish about Indian markets. Everyone was talking about 5950, 6050. It made a top of 5815. MK crash had not yet happened. This was at 9:15. It happened at what? 9:59. So first half an hour there was no news, nothing negative. Everything was very good. But still these patterns were formed on the put charts. I have been telling a lot of people that the put charts give some indication that something is wrong. So it was worth, I'm not saying you sell off all your longs and go short heavily and nothing like that. But it's worth taking a small bet on a put on such a day. You can follow your longs by trailing them as per your system. I watch everything. I constantly keep changing between the future, spot, calls, puts. The first 15 minutes normally give a hint if something is going to go that day. So that is the first 15 minutes usually give an idea. Again I am repeating, it's not, since we have been talking about trend following and all that, I am not saying that you should sell off your longs and go short and all that, but it is worth taking a contrarian bet since the risk is very low. It is very low because in this case, the 5,800 put opened around 58 and immediately went to 118 when that MK news came. 58 at open and 118 in 45 minutes. Luck, 5,50,000. These are all, that's why I call it lottery. Option trading is lottery. You cannot, you must have different separate account to trade options, not your main account. Because you will get greedy, you will get tempted, you will put more. You should always put only what you can lose, nothing more. If you have an account of 5 lakhs, let that remain. Open a small account with maybe 30, 40, 50,000, whatever you can afford to lose with a separate broker as a different account. So here what will happen is if you have the same account, you will go long, you will sell all your longs, you will buy maybe 1,000 puts and it won't work. So you can imagine what loss you can suffer. Is that if let's say Nifty had still gone up, that 58 would have become 40, 30, 20 in lakh ka 12,000. No, this was just an example. Again, I am not going to explain any trading techniques. All the exits which other people have said, you can use those. I will explain some other techniques, but the same patterns which you do on Nifty futures, you can use on options, Nifty options or any stock also. And you can exit the call or put. And yeah, but if let's say Nifty is trending, I'm not, October is a very bad example for trailing, but if let's say Nifty is trending for 7-8 days, if you get a 200 point move in Nifty, you will get a 70, 80, 100 point move in the call. This was an exception that 60 to 120 doesn't happen every day. Another positional trade, Tisco. The whole world was bullish in Tisco last month. Inverted head and shoulders and breakout and whatnot. But there was a long-term trend line here. In fact, on one day it had crossed that trend line. So everyone was talking about breakout ho gaya, target 485, all sorts of targets. But it could not cross that trend line for next couple of days. Again, this is not that MK, because you can see this long tail is at 5th October, it was after that. Nifty had already started not started the downtrend, Nifty had topped out with that of the 5,800 put. So only one stock, Tisco, logically speaking, cannot break out and go to 480. So something was wrong. When I go there, it started. At the same time, there was this big resistance of the long-term trend line. Right from February 2012, long-term trend line was there. So something was wrong. So it was worth looking at some trade in options. So when you spot such a pattern, it's worth looking at the charts for the calls and the puts, just to get an idea if something is, if it is giving a hint. Now this is the chart of Tisco 420 call option for October. This is right from September. So this is the day it made the top, around 12th of October. Now the hint which I was talking about from the call chart. Now this is one advantage of having these charts. These are global data feeds charts, which I'll give you the basic difference between others. Whenever October options start trading, they don't start trading on the first day of October. They start trading 3 months before, even stocks. So that data also is there on these charts. Even in September, Tisco October options were trading. Maybe volumes are less, the prices are being printed. So it could not cross this top. It was just a hint. I'm not talking about any confirmation. It's almost a double top in the call. 420 call, it could not cross the previous top. Although Tisco was trying to push against that trend line and could not close above the trend line. But still, chart, once it cannot cross the top, it's worth looking at the chart. The breakout is confirmed when the call breaks out, not just the stock. Because whoever is short in Tisco has that as a stop loss, not the cash price. So even if maybe when that top earlier was made, Tisco might be 415, maybe 410. Now it is 425, but still his position is intact. Whoever shorted there initially. So this was a call chart. What happened was after that Tisco, in fact this is a classic example of time decay. Someone was asking. It was the first few days of October settlement. The call, even after 3-4 candles, you can see it is not crossing the 20-25 resistance. Again, selling options is risky. You all know that. It was worth the risk because the stop loss was above that previous stop here. Here we are around 16, 17. This 18. So a very low stop loss of 2 or 3 rupees for selling a call. It is one of the best risk reward you can get because there is a long term trend line on Tisco. Because above that it's a clear breakout, you can just go long any call also or futures, cash, whatever. But that does not happen, that means it is going to come down. You don't know where it will come down, so there is a pullback. So selling the call over here around 17 with a stop loss of the previous stop, which is around 18, 19, 2-3 rupees stop loss, and look at what has happened later on. This is a Tisco 420 call. Same thing if you see in the Tisco cash chart, that has not crashed heavily at all. From 426 it has come to about 405, only 15 rupees. So it's not a crash in Tisco, but if you see the call, from 16 it has come to 0.45. So full gain of 16, 17 rupees. Okay, I'm not saying you can see the top. You might have sold at 15. But still 15 rupees in just 4-5 days is worth the risk of 2-3 rupees. Yeah? Yeah, I'm coming to that. You cannot decide. You have to look at both. That is the answer. But in this case, that's why I'm giving the example of the put also, the put chart. Now here, like in the DL case, when it made a double top, you could have easily, instead of buying a put, you could have sold the call also. There is a difference because for selling a call, you need full margin which is equivalent to futures. So the investment, I mean your margin allocation is high. Whereas buying a put, let's say DLF for 2000, lot of 2000 put at 3 rupees, just 6,000 rupees investment. Whereas otherwise, I don't know, DLF futures 70, 80, 90,000 rupees you would have need to sell a call. That's the difference. So depending on what kind of account you have, it is up to you. Someone has a bigger account, you can do both. Sell the call, buy the put. So you are completely bearish. Why it is dangerous to buy a put? Because that time Nifty, market, everything was very strong. There were no indications of bearishness or sideways, nothing. Could have been just a temporary pullback of maybe another 5 rupees or something. From 245 to 235, like that. Just a 2-day pullback. So you don't know whether the put will really rise, but a call will definitely fall because of the time decay. So that's why this Tisco call also, what it means was, and That is, I'll come to it later. Even here, this is something I have observed live when it happened. Even in the first few days of October settlement, TISCO 420 call, the open interest that call was continuously going up every day, every single hour, although TISCO's cash was rising. It could have been both. It could have been hedging done by the long futures. It could have been shorting by bears in TISCO, whatever. But the open interest was going up, up, up. So that's why it was worth looking at a trend when it came down. Yeah. No, no, again, open interest going up is not the only indication. No. But since, when open interest cannot be traded on its own. No. Open interest is going up, that means something is happening which is not normal. That is the only hint. At the same time, when TISCO was going up, I showed you the cash chart, that long-term trend line. That long-term trend line could have been drawn even before it reached. You got me? This trend line. Forget these candles. Let's say we are over here. The open interest was rising even from that portion in October. But you know that this trend line can be drawn even that time. You get me? This trend line is right from February. So whether the price crosses or not, you must draw this trend line. You could have drawn this trend line much earlier. And then the meaning of the open interest high can be related to this trend line. Once it is, you can see that it is not crossing. In fact, someone had asked me on Twitter, open interest of TISCO is going up, TISCO is also going up. That time I had not, this was again a trade in hindsight, but this is what you can look for. Now this is the TISCO 420 put. You were asking me what happens if instead of a call you buy a put. This is the same 420 strike price but the put. This was another indication from the put chart that 425 is going to be big resistance. You can see multiple bottoms here. Okay, it's not exactly double bottom, I know. I mean, it's not exactly the same level, but similar, in a band. So what it means was whenever it reached that, someone was buying these puts here, which is around maybe 4 or 5 rupees. So it might be someone knowledgeable that TISCO is not going up, stalling or whatever, or someone taking a risk of buying a put. But someone was definitely buying puts there, over here. At the same time, open interest of the 420 call was going up. So if you put all parameters together, the long-term trend line, 420 call, open interest going up, 420 put not going below a certain level, constantly seeing buying, it makes sense to be careful if you are long in TISCO, or if you have nothing, either selling a call or buying this put. Stop loss again here is very clear. The moment TISCO crosses that trend line, again you get out of the put. Or for the call, I showed you the stop was 17, that is the stop loss. For the put, this is the stop loss, maybe a couple of rupees below this low. Of course, this chart is dated 23rd, only updated till 23rd. I have not updated after I came here. But I believe TISCO expiry was some 398 something. Right? Anyone knows? TISCO expiry? 390, yeah. 398. 26. Which means this put has gone to 24. 420 put. I hope there is no, I faced this question a number of times. If TISCO expires at 400, what will be the price of 420 put? Does anyone have any doubts in the answer? It is clear, 20. So when here, once you buy this put, you keep the stop loss below that low every day. Let TISCO do whatever it wants. As long as that trend line is not crossed, this low is not broken, in the call that high is not crossed, your position is intact. So this is, we are talking about a positional trade for a few weeks or October. Another thing which I use for everything, not only options, the length of a trade, duration of a trade is directly proportional to the time frame on which you observe the trade. If you are looking at 5 or 15-minute chart, it can be maximum intraday or maybe 2-day trade. If you are looking at daily hourly charts, maybe a few day trade. If you are looking at daily charts, few days trade. If you are looking at weekly charts, it can be few weeks trade. This is one thing, that's why this was an hourly chart for a positional trade. The duration of a trade from entry to exit is directly proportional to the time frame on which you spot the trade. This is another positional trade which is a couple of months back. Now there are people, I always say options charts give a hint of a reversal, either topping out or bottoming out. Another way to spot reversals is elite wave. I don't know elite wave. Sorry? No, I'll tell that. I'm coming to that. I had read some elite wave count. I read a lot of stuff, but I've never believed elite wave. But there are people who strongly believe elite wave. Let's say there is someone who has an elite wave count which says this is TCS. TCS is going to have a very good run in August. This is his count. This is not my count, but I am just showing you a trade which is possible if you have a view. This is TCS August 1200 call. Again hourly chart. This is the expiry time, August settlement. July settlement. Once August starts, whatever the view, if your view is it is going to be up for the whole month. If you buy over here, the 1200 call, it is around 40 rupees. Stop loss is very clear, the previous low. In put or option charts, this works much better than futures or cash charts, the lows and the highs, very well. Because if that breaks, it will crash. Stop loss is say 5 or 10 rupees. TCS is what? Lot is 250, I think. 250. This is something based on a view that TCS is going to be a good runner in August. That is the basis, which is an assumption as far as this trade is concerned. So just buy this call with this stop loss, and that's all. This 40 has become 150 in August. Almost 4 times appreciation. Whether you buy futures, whether you buy cash, there is not going to be such appreciation in any other instrument except the call.
Here, like, no, you're just taking up the entry and the final thing. Like, the system could have given a lot of exits, right?
No, you have if you see the first statement was you have a view that this TCS is going to be bullish in the month of August, which means till the end of the, that was the basis. See, there are elite wave counts which have time targets. If I have seen some counts where, let's say TCS buy at 1198 with a stop loss of 1190, target by 31st August will be 1300. There are such. I'll come to that. Yeah, there are data providers. Yeah.
If you have a view that future would, the option would go high, you need to change your view, right? Otherwise,
No. Elite wave, they always have a very, extreme view. They don't have a 10-20 rupees view. They always have a 10% view. Am I wrong? If you follow elite wave count of anyone, they don't have a okay, elite wave can be done on intraday also. But if this was a monthly view for TCS, that month on a monthly basis, TCS will have a good month.
But on a daily or a weekly time frame, nobody in elite wave trades for 10% gain. Trade for 30%,
Yeah.
30%, 100%. Nobody trades for even 10% if it is a daily or weekly.
Again, the duration of the trade is proportional to the time frame on which you have. Someone was asking. The basis of the trade is an assumption or some other theory by which you have arrived at a view. It is not a view I am saying was there. But if you have a view on TCS based on some other logic, idiot wave or any other logic, some rumor, some news that August Nasdaq is going to be up or something.
Here also you can 060 you have a clear view.
No,
You can buy
In fact, all trend following techniques in terms of pivot highs, pivot lows can be followed in an options chart, even if you don't have a view. As I said, same lower, the earlier pivot, once you take this trade, it goes above this, this is the stop loss. Once it goes here, just shift it. But your view is still intact. You know, there is no reason to throw that view of the whole of August going to be good for TCS. So there is no point in selling that call. Because that view was for the whole of August, which means till the end. This is another example of TCS 1300 call. I don't remember what was the rate of TCS when August started, but this is just another example of TCS 1300 August call. It was much lower in premium. Here, it was less than 5 rupees. So if you want to take a lesser risk, see there is a big difference between 1200 and 1300, it's almost 8% in the two strike price. So that's why, but since you already have a view that TCS will go to 1400 or something, it's worth buying a 1300 because even when it becomes 1400, the premium you will get is 100 rupees. And at this level it is only 5 rupees. Here. This is 0.10, so in fact less than 5 rupees. In fact, someone was asking me about time decay. This is the example of time decay in TCS. You saw the TCS 1200 call which just went up and up. But the price had not yet crossed 1300 it seems. That's why this 1300 call was being sold off. Which means whoever was long in future was hedging with by selling 1300 call. But when the price crossed 1300 also, even the 1300 call started going up and it shot up in the, look at the last day of expiry. This is the lottery. 20 became 15 one day. Now how you can follow a trend following technique, something similar to, I've just taken some 34 EMA just for the sake of example. I'm not giving an example of a specific system. You can follow your own system on an options chart. This is just an example. This is September 5300 call, in which Nifty gave a very big move. Now this is a 30-minute chart with a 34 EMA. The time frame of this chart is 30 minutes and the moving average which you see is 34 EMA. 34 EMA, okay, this is just my own experience. If you are looking for a swing or a positional trade, on a half-hourly 30-minute chart, 34 EMA gives good trade even for trailing. So you can get good moves even in options. So here it has broken out in the first week of around the 10th of October. It was 70-80 rupees and the whole of August Nifty was up. It went all the way to 400 from 80 rupees, 5 times. I'll keep repeating, this is extremely dangerous, but this is what you can do if you do it well. Because at 70 if Nifty had not gone up, it could have become 30, 40, 20 in no time. Yeah, that's what I'm saying. All the charts look good, very good in hindsight. But over here, when it is broken out, it was worth taking a risk because the stop loss was only 10, 20, 30 points away. If your stop loss in Nifty is going to be, let's say, 30, 40 points, in the call option it is much lesser because if Nifty falls for 50 points, the call option will not fall 50. It will fall only 25, 30. So that is the risk. You can trail the position as per the Nifty futures level also, either on the call chart or the Nifty level. This is $1 million question. Typically in stock options, it is very dangerous to put the stop loss in the system. Mental stop loss, you trail it as per the Nifty level or on the chart.
At the bottom of the fiber?
Yeah, the first stop loss will be here, straight away. And then again, follow it like, yeah, 20 rupees is not much in Nifty option, no, nothing. It's a good stop loss for, it's not like,
And by trailing, what do you do?
trailing, yeah.
By trailing, what?
Trailing as per the pivots only.
So you go out.
No, here you will again point out that at a couple of places it has broken, yes, but the Nifty trend might be still, it might be going sideways or, so on such days you exit this, go for a higher strike price for the next breakout. Because there is no point in buying, see here, the call is already 180 rupees. Here it is already 240 rupees. When that Nifty gives that 2-3 day continuous jump. And one day it has gapped down. So you are exiting that call. From 80 rupees you have exited around 240, 250 rupees. It is still a good trade. So you do nothing. Exit, sell, stay away. But when you see that the trend has again resumed, because here when the call is 200, I think Nifty should have been 5500 easily. So you go for the next strike price, 255 or 5600.
So your ideal stop loss is at the beginning of the 5 and later when it breaks 34.
Yeah, half a 30-minute chart. But then breaking exiting a trade does not mean it has reversed, the trend has reversed. It is just exiting a trade. And when the trade resumes, what you can easily do is jump to the next trade, not next. Here it is, it's a big move, so 5500 or 5600 call. Now one thing I always follow, this is again personal observation. Yeah? It would have. I cannot show so many charts. Time is limited. It should have. Yes. I can show you later on. I'm sure it should have given us that. One thing I always follow, as you said, do you also look at calls and puts charts continuously? Continuously in the sense every 10 minutes, every 15 minutes, every half an hour. It's worth looking at the charts to get an idea of what is going to happen. So this was one idea, which is, this is again the 5300 call. That this is another way of trailing it. 30 minutes was the 34 EMA. This is another way of trailing it, by which if you see, you are holding it throughout. But then you should be sure that it's going to be a good trend. You cannot be sure, but it was worth taking. Maybe you sell half the position and trail half by this method. This is nothing but a 200 moving average on 15 minutes. It works really well on options, really well. I can show you hundreds of examples. It acts as a resistance if it is below, it acts as a support if it is above.
Resistance on option is reflected in the Nifty future.
Yes, naturally.
Is this the SMA or EMA?
EMA. EMA. 200 moving average on 15-minute time frame for options is the best indicator whether, I'll tell you another example. In October what happened? Neither the calls nor the puts were able to cross 200 moving average on 15 minutes. Neither the calls nor the puts. So it was not bearish, it was not bullish. That's why it was trending. It was sideways. Sell both. Sorry? See, if Nifty, it can't be, if Nifty is at 5500, you can't talk about 5900 call. Add the money, I mean the same strike price, one above and one below. You should see three charts. So 3 into 2, 6 charts. Which chart, which strike price to? But here, see, Nifty here was around 5400, it went to 55, 60, 5600, and it went all the way to 420 from 60, 70. So it is worth taking a small risk of maybe one lot, depending on your pocket, on your risk. Let's say 2 lots is only 7,000, 8,000 rupees, and keep trailing it. That becomes how much? 5 times. Now this is October. This is an example of what I told you just now. October 5600 call when Nifty was continuously between 5650, 5700. If you see after the 5th October top, it has crashed below the 200 MA on 15 minutes, EMA on 15 minutes. And if you see like what he was explaining about the slope of the line, it's continuously trending down. Is it clear what I am saying? 200 moving average on 15 minutes. Sorry? 200 EMA on 15 minutes. So it made lot of, whenever it went, it came down, it immediately rose, it tried to cross the 200 EMA, it could not, again came down, every day same thing happened. exponential. Now we come to something which is extremely debatable theory, but I use it very much on options, open interest. Open interest on futures is very debatable, not on options, because it gives this is a real-time change in open interest on an intraday basis, which global data feeds gives in the data when they provide the data, you get OI data of the options, intraday live. So this is a live intraday chart, continuous chart of open interest of 5,600 call. Right? Yeah, when it has gone down, it is red. When it has gone up, it is green. No, this was just an example of chart of open interest. There is no interpretation in this. I'll show you an example which is there later on. This is another theory which very few people use in India, Max Pain. Can you see what is written at the back? I'll read it out. What is Max Pain? Max Pain is the point at which options expire worthless. Options, whoever has bought that strike price will see a big zero against that price on the last day at 3:30. So there is some means by the market or by the operator or God knows who, but it ensures that maximum people will suffer on the last day. That is called Max Pain. If you ask me how it happens, I don't know. It happens. The term Max Pain stems from the maximum pain theory. You can Google for it, you will get a lot of articles on Max Pain, which state that most traders who buy and hold option contracts until expiration will lose money. According to this is due to the tendency for the price of an underlying stock to gravitate towards this max strike price. That's why I was telling for the last 2 weeks, pain of Nifty is 5700. On Twitter I have said it 100 times. Expiry 5705. It will work 10 out of 12 times. It won't work every time, but it's worth having it in mind. About 60. This is again an article from the internet. Gravitate towards this maximum strike price, the price where the greatest number of options in rupee value, here is dollar, will expire worthless. About 60% of options are traded out, 30% of options are worthless, and 10% of options are exercised. This is for the American options. Max pain is the point where option owners feel maximum pain. They might have bought a 5,000, someone might have given a call on expiry is going to be at 5750, there is going to be a breakout, so buy 5,700 call at 10 rupees, at 330 they see zero. That is maximum pain. And there are a lot of retail traders who fall prey to this kind of, this maximum affects retail traders most, not the institutional traders. No, whatever, the maximum pain theory holds true for any options. If you have a 5,700 call on expiry, it is going to expire at zero. You will not get anything. I didn't get you. Yeah, naturally. No, that's why if maximum pain had been 5,600 2 days before the expiry, market would have crashed. Yeah, exactly 5700. You can't have a closing of 5700. Huh? Again, I don't know who does it, how it happens. It happens, that's all. So just follow what happens. It might be operator, it might be, I don't know. Again, a very loosely used word. One trade based on max pain last month. It's a very difficult calculation. It's really the open interest at every strike price. But there's a which calculates the max pain for you. Option Oracle. I'll give you an example. I have that. In September, that time also towards the end, everyone was on Nifty. A lot of people are saying there's going to be a breakout, expiry at 5750, 5800, or breakout in the last 2 days. All sorts of things. This is the chart of 5,800 in September 5,800 put. So if you see, it is forming a base and not going below that base. This is a 5-minute chart. You are coming to a couple of days or an intraday trade. That's why this is a 5-minute. And towards the end of expiry, I mean it's on expiry day, but it's worth looking at a 5-minute chart, what has happened in the last couple of days. So here if you see, it has made a floor around 9500. This is 100, this line is 100. Whenever it goes near 100, so many times, here, multiple bottoms at 100. This is a 5-minute chart. So even if you see a hourly chart, there will be at least 5-6 bottoms at 100, which was an indication that expiry is not going to be beyond 5700, because that 100 is being protected in 5800 put. So there is not going to be any breakout above 5700 as far as expiry is concerned. I am not talking about the trend after the expiry. That's a different story. If the bottom line is the open interest in 5800 put. See the open interest, this is a line chart of open interest. Expiry day was 27th September. 3 days before that, 2 days, on 25th September. Again, this is in hindsight, but this is an indication even intraday. Over here it looks even better. You can get a hint. Down here, the open interest has topped out. It has broken the support. Even open interest, you can follow the pivots and all those parameters on the normal. So which means 5800 has started losing open interest. Now what does that mean? Anyone? What does it mean when 5800 put starts losing open interest 2 days before expiry? Sorry? Covered. Which means they are not, market is not bullish. When open interest of a put starts rising, that means a lot of people are writing puts, is rising, and that's why market is bullish. But when put starts losing open interest, at the same time the price is not going below 100, that means this is definitely not bullish. So this is a double hint, the trade which I am showing for the last day of expiry, that something is wrong. All the talks of breakout are not going to happen on the expiry day. Forget your other trades, you might be in your 3x5 or 34, whatever. That's a different story. This is a different trade altogether. This is a couple of days or intraday trade. What happens on the last day? Open interest is still coming down continuously. Here the open was 1.6 million. 1.6 million open interest 2 days before expiry is really bullish. It is bullish. That's why people are talking about the breakout towards expiry. Any open interest which crosses 1 crore, around 1 crore is a huge open interest for a Nifty option. So this 1.6 million has come down all the way to 1 million over here. And the last day has already started. Expiry action is about to start. So how to get a trade out of it? You know from the last 2-3 days that there is a floor level at 100 which is not getting breached. So you have to spot a trade when it comes close to 100. At the same time, open interest is still going down. Now here is another tool to get entry and exit levels. Anyone heard of Camarilla levels? Camarilla. Lot of people have heard. Camarilla levels are nothing but mathematically calculated levels. Again, this is magic. How they work, I don't know, but they work. So Camarilla levels gives, see those levels plotted on the bottom pane. This is a pivot which Camarilla calculated, the yellow line. The two lines blue are the support levels and the green and red are the resistance levels. For that, Camarilla is only for intra. It's not for a positional trade. So you have come to a conclusion end of on the last day of expiry that Nifty is going to be bearish. You need an entry in 5800 put. It is not going below 100. In the first, now this, if you just look at the couple of hours, there is some contrary indication going on. The put is losing price. In terms of price, it is going down. But at the same time, open interest also is going down. So this might have tempted a lot of people to buy 5700 call that day, this action. When they see 5800 put is going down, which means 5000 is going to be crossed on that day. So this really tempts and that causes that max spin. Lot of people start buying 5,700, this happens, but again, this comes to the level of 100, which we have established over the last 3 days. It does not go below 100. This is just an intraday trade. I am not. It's an example of an intraday trade. Worth buying it over here near 100 with a stop loss of 10 points because 90 is the stop loss, which is a per lot risk is only 500 rupees. And then you know the where it's going to this area which is 120. This is one area which is 135, and this is one area which is 148. Last 2 hours, 100, the put became moved from 100 to 150, and expiry was at 5650, 5645 I think. Now in the last month of October, yeah. See, if you have data, I mean charts for all strike prices, you can't see all the strike prices continuously. But here, the 5,800, it needs a lot of homework also. At during trading, you keep a watch on that earlier pattern which I showed. Could have been in the evening when you are relaxed and you are just studying the chart. That 5,800 put is not going below 100. This is just a which you need to be kept in. You have to keep in mind, which has helped you in the last day. So in the last 15 days when Nifty was range bound, Umbrella has given a lot of good intraday trades. This is 5,600 call in October. This is 22nd October. I am not saying this is a buy signal, but whenever you get a buy signal as per the other pattern, whether it is pivot level or any moving average or whatever, since it is, we are on the 22nd October, so last almost before that 1 week it is range bound. So whether it breaks off, you don't know, but it is worth taking an intraday trade in options. That is the basic conclusion. So here, the hammer pattern on the on the call, on a 5-minute chart. Everyone knows candlesticks, right? Hammer on a candlestick. So the call has formed. Can you see the hammer here? And it is not going below this level. This is around 28. So it is worth taking a risk around with a stop loss of 5-6 rupees below this low, which is around 72 I think. There is no exact there. So you get a trade up to 120. This is purely intraday trading in options, where you get a from 80 to 120 when Nifty might have moved from, I don't know, maybe 70-80 points to 5720, something like that. So this is an example of an intraday trade. Same trade on 5700 call. 20, the 5700 call 20 here, and we are still here 5700, so there is no reason to buy very much in the money. You can buy 5700 also. That became
Essentially, you fix on this stop loss.
yes.
You don't have a target when you want your trade.
No.
So you only know what money you can afford to
No. There are examples where you can get a target. Let's say I told you about the 200 MA on 15 minutes. Let's say the option is well below the 200 moving average. Let's say there is a call that 200 MA is the target. No. Yeah.
More on a very good, nothing based on actual chart of
No. Yeah.
I think all of them are Nifty is trading one strike price above or one strike price.
See, for any option trade, you have to follow the Nifty levels also. If Nifty is near support 5640, 5650, it's worth going looking at the call chart to see if there is some pattern available there. It's not of the call on its own. But at the same time, the other earlier example which I gave of 5800 put last September. That was a pure trade on the only put chart. Nifty was showing nothing, no indication of any crash. That happened only the last 2 hours, from 57.10 to 56.50.
Somebody knew about the crash. Wait.
Somebody. Yeah.
Or the person he had the idea.
Sorry? No. What I said was different. For stop loss, you to have, see, there are two types. One is Nifty, one is stocks. Stock options are not very liquid. The spread can be 3 and 4.5, or that kind of. So if you put a stop loss of 2.9, in 5 minutes it will get triggered. And the levels of options are not as precise as Nifty. You know, I have a support at 2.9. It's always a range. You put a stop loss of 2 rupees, that's fine. But then your risk goes up. In fact, that is one thing I forgot to mention, that whoever trades options must be in front of the screen. You cannot take a trade and go for a walk. Okay, walk is fine, 10-15 minutes, but you cannot go for a movie. Now this is another example of a chart which shows that Nifty was range bound in October. This is 5800 put, 15-minute chart. Right from the first week, you remember I had showed this earlier, which was a potential trade. It gave an oops here. It went all from 60, it went to 3140, but it is never crossing the 200 MA that line decisively. It's always coming down immediately. Normally when trending move, that line is kept far away and just going up and up. At least it should take some, it should not be reached. So these were clear indications that October is going to be bad for option buyers and very good for option sellers. This is how max pain looks in a picture. It's a from a software called Options Oracle. There is nothing but each bar is a strike price, right? 4,000 to 7,000. It is nothing but a strike price, and you are asking me for the calculation. I can show you, I don't know it. It's like asking what is the formula for RSI. You don't need to know it. Yeah. This is the max pain for that month, which was, and this chart was on 23rd October, much before expiry. Not, I mean, updated later. This was dated 23rd. This one. This is a market option value. I mean, what is that? See, I'll tell you a basic idea of how they calculate. They calculate at every strike price. That's why it needs automation. It's not possible manually. Either you need an Excel sheet or this software. Every strike price, average rates at which people have sold or bought, and then they are every strike price they have a bar.
Does that say what is the value of the option at the expiration?
Yes.
That one shown on the right.
So which is the bottommost low in that chart is the maximum pain. So when we are in around 5,700, there is no way we are talking 4,000 expiry or 7,000 expiry. We can't even talk of that. It will not happen. But you zero in over here, and I'll show you a zoomed. This is a zoomed version of that chart, the previous one. The 5,600 strike price is a bit higher. 5,800 strike price is much higher. 5,700 is the lowest. This is the level where there will be maximum pain to option buyers. This is not the OI or anything. This is the maximum pain level. This, again, maximum pain, a lot of people start asking me in the first few days of expiry, what is the maximum pain? Maximum, it's too early to talk of maximum pain in the first few days. It starts getting developed only towards the last week or maybe the last 10 days in an expiry. Because by that time, the Mr. Market has an idea who is going to be killed this time. Another page which you must follow if you are an options trader. This is a NSE derivatives page, which is always open when I am in front of the computer. The earlier things which I showed you was all charts. This gives an idea of the whole picture of open interest on one page. This is not an auto refresh. You can put it on auto refresh on fire. This is a page on India which gives live data of options. These are These are calls of all strike prices. It gives the bid price, ask price, it gives the volume, IV, change in and open interest. This change in OI is what you should look at near the 2-3 strike price which are at the Nifty level. Any questions so far? Yeah, band which will be tough to cross on either side. If it's too early, as I said, in the first few days it is not it doesn't give a good idea, but towards the end, let's say 10 days before the expiry, if the maximum OI inputs 5600 and maximum OI in calls is 5800, that means, in fact, this is another observation, this is again not in textbook. If Nifty is at 5750, it will come once and test this OI, the bottom level, and then again go back. Yeah, whichever is the OI, maybe one more strike price above that, you can write. If it is 80, the next strike price will be maybe 50 or 30, 40.
That definitely worthwhile for you to ride a higher. And I know we do. It will be better to be in the money rather than to be the strike price. It will be not worth.
Yeah, but if you have the first chart,
That is what it is. Then what is the great idea of getting that kind of money or making the food and then paying it in terms of this market? If you have a 50%, you have a good version. To write that it makes sense. Otherwise, it doesn't.
yeah. Don't follow TV. With due respect to whoever comes on TV, don't follow TV channels for anything on derivatives, especially options.
Can you identify whether, or how do you identify whether the cards are being written or puts are being written?
It cannot be identified. It cannot identify. The chart tells you. No, the chart tells you. If it is, if the call is not going up, it is range bound. If the put is going up, that is also range bound. That is. No. See that basic, the first chart which I showed on 15-minute 200 EMA, if that is well below the strike price, that means that chart is bullish. If it is a call, that means Nifty is bullish. If that is a put, that means it is bearish. You cannot know, so let's not waste time on that. That's the thing. Just follow the chart.
Sometimes both the options are disabled. Some options are disabled. Like you will not be able to trade that option.
You mean FNO ban?
Suppose there is maybe it is having a good result like at the time like call options are disabled. I am okay like no, we are able to enter. What happens to those who are already in?
That is, you are not required to square off. You cannot take fresh positions.
But people will
Fresh position. If you already have a position, you can hold it.
who will be able to if no one is able
They are squaring it off.
to
That is. It doesn't mean you have to, even if you are holding a call much before the ban, you have to sell it off. No, you can hold your position. You cannot take a fresh position. And that too, only in the period when the ban is there. If the ban is lifted in the next 3-4 days, because see, what is the ban? That 95% derivative market limit reached or whatever. So there might be a day after 5 days when the ban is removed. After trade. I mean, even in fresh positions.
But all those things you can trade intraday.
Yeah, intraday you can trade. When you say fresh position, it is for overnight. You can trade intraday. Then you must make sure that at 3:30 you are out. Sometimes what you are not in profit, I'll take it, carry forward.
5,000 rupees. Per day 5,000.
Yeah, he knows the fine. It is a heavy fine. Yeah.
Any particular is likely to go up at the end of this expiry. If the spread is bullish and the bid of the month, we should buy call option or we should sell put option.
Yeah, I told you in the earlier thing, selling a put option requires margin equivalent to futures. So let's say the margin for 80,000 rupees. You have to put aside 80,000 rupees. No, that is difficult to say. That is difficult to say. Unless you have a view of a very big move. If you have a view which says it is, chart doesn't show that. So in the cash chart, you will have a target. In the cash chart, you will have a target. Just give me an example. Today disco is what? 395. At the end of November, give me some figure of a target. 35. Fine. And it's the middle of the month. So you are at 395. You have by other means at a target of 435 towards the end of expiry. That is your question. So it is very.
My question is that if we are getting the chart indication of 435 at the end of the month.
I know.
In the cash.
If you have a clear-cut idea of a target, then it is worth going long call. Yeah, because if you take a 420 call, you will get that when.
Again, here also, which call we should take?
That's what I'm saying. When you say 435 near expiry, that means 440 call will be. When cash is 435 at expiry, 440 call has no meaning. So the lowest possible, the first possible option is 430. But again, maybe now, which is still 2 weeks before expiry, 430 call might be 5 rupees. First of all, Tisco doesn't have a 430 call. It's 420, 440. Yeah. Let's take an example. So if it is still 2 weeks expiry and target is 435 and 430 call right now is 5 rupees, it won't be very cheap. What is the target? 435. So how much can the call become? 5 rupees. You're not going to gain anything. So go for the lowest strike price. 420. 420. No, in the initial days of expiry, you can buy out of the money because the whole 3-4 weeks is balance for that. No need for in the money. It should be below the target.
What is the current price? That's what.
395. 395. 420 also, yeah. As long as there is some appreciation. See, thing is clear. If you are whatever the call you are talking about, if the target point is 435, which means 420 call will be 15, 430 call will be 5, 410 call will be 25 on that last day. So whichever suits that target, as long as you get some profit. I know, yeah. 400 call will be 20 rupees. But your stop loss is, let's say, 395. So you won't lose 10 rupees on the call. Yeah. Zero. It is below 400. Zero. Yeah, what is their use? Yeah, see, when the calls are going up, I know, but then that chart is telling you what is happening. Whether bear getting the calls or bulls are hedging with their futures by getting calls, it doesn't matter as long as the call is still going up.
But in most of the forums, like I have seen why are writing like unwinding,
See, what do we mean by unwinding? When there is a lot of open interest initially, that example of Tisco which I gave, October, Tisco was around 400, 410 at the start of the expiry. In spite of that, 420 call OI was the highest. It was a huge OI, even when Tisco was 400. And towards the 8th or 9th of October, it went to 400, 420, but it did not start dropping. So they were not covering the call. They were sure that we are going to hold that trend line, whoever had written that call. So unless you see a drop in the OI or 420 call, you need to be cautious around that trend line, Tisco, that long-term trend line which I showed. And once you cross that trend line, you will see a huge drop in the OI of 420 call. Intraday, it will lose 10,000, 20,000, 30,000 in 2 minutes, 3 minutes, 5 minutes. Really a huge change in OI which happens when there is a breakout. Yeah. I can't hear you.
Buy it in the money or out of the money or deep in the money. So what is the basic logic?
See, when Nifty is 5700, 5800 is out of the money. 5900 is out of the money. Call. 5800 put is in the money. 500 put is in the money. 5600 put is out of the money.
What is the logic? See, if you are buying calls, you should be buying in
No, that's what I was telling. It looks, again, you need to have a target in mind. Uh, First of all, you should buy either at the same strike price near the current price. That is the best. Otherwise, you go to the next higher strike price, because what happens is the same strike price is very expensive. Very expensive. Like for example, Tisco 400 current price, the call will be around 200 rupees, 20 rupees. So it's expensive. Lot of 500, you need 10,000 rupees. But at the same time, the next strike price is also good, because that will be half of it, maybe 10 rupees, 8 rupees, like that. You should not buy too much out of the money. In Nifty you can do that, because Nifty can move 200 rupees. Tisco, because from 400 to go to 440, it is a 10% move. So you're not sure whether you will have that 10% move. It is very much in the market. It's like as good as buying futures. 390 call will be 30 rupees. It's almost 15,000 rupees. Okay, you can buy 2 calls, but then it doesn't make sense. In options, you need to buy at the money or first out of the money. Any more questions? Okay, a lot of you must have spent 10,000, 15,000 coming all the way from wherever you are. This is a potential trade for for November. Potential trade. I am not saying it will work. Don't blame me if it doesn't work. Yeah, you can recover your cost. This is a chart pattern I have observed over the last 5-7 years, and if it happens the way I think it will happen, you will get your costs back. This is around 23rd October. I don't know what has happened in the last couple of days, but I am sure that this is 6,000 call for November. This was around 20 rupees on the 23rd. I am sure today it must be around 8 or 9, because Nifty has it has gone down. If you see, this is a pattern. This is not a lottery. I mean, with some logic. You see here the supports. As long as that is intact. See, there is another view, because Nifty has to break out or break down. It can't remain in that 50-80 point band forever. It has to go up or come down. So if you are getting the call below 10 rupees, around 7-8 rupees, which is just 400 rupees per lot. Don't tell me 10 and 20 lots, I am talking about one lot. So looking at the top, there is a double top which has happened. In fact, that was another hint of the top at 58.15. I can't say so many things, but this you can see over here. This double top. So just going by the pivots, if you get it below 10 on Monday, just buy it. The loss is only 500 rupees. But the targets are this top, which is around 45, this top, which is around 60, or the final top, which is around 80. Don't ask me Nifty levels. These are only option levels. So you can buy 2 lots, sell half at double, the other half is free. Trade डाल दिया क्या? When you buy at 6-7 rupees, why do you need a stop loss? Any more questions?
Yeah. It's a valid point. If he buys at 10 and he sells at say even 45, the brokerage will be more than the amount which he has paid for the actual.
Sorry?
The brokerage which he pays at 45 or 80 to sell that call back will be more than what is the actual price of the purchase.
But look at the profit you have paid.
Just joking.
And no, another thing, if it goes to 45, you don't sell it because of that logic. And expiry is at 5700, 0. Sell it sometime. You have to recover the cost of the trip, no? That is the idea.
I know how to sell. I'll ask him. Can I sell?
Any more questions? Yeah, okay. One question I've missed. Now, out of the list of stocks in futures and options, 250 or whatever, there are hardly 30 or 35 stocks which are liquid in options. So automatically the rest are out of question as far as options are concerned. But again, out of 30-35, you cannot keep a watch on so many stocks because one stock has at least 4-5 strike prices, calls and puts, which is 10 on one stock. So you'll have to watch 300 charts every day. Not possible. So what I do is I don't, there are some, even in that 30-35, every person has his own favorite stock. For whatever reason, every person has his favorite list. Maybe it has given a good trade earlier, good profit earlier. Every person has his own hate list. Some stock has never given them a profit. So just shortlist as per that. And take 10 stocks, not more than 10, which you follow every time. The most easy to, not easy, the ones which give good trades from my experience, DLF, Tisco, SBI, Reliance, no, sorry. Huh? HUL. No, this is my favorite list. Everyone can make his own list. Oh, secret hai. Favorite.
The same NSE website, if you go into the option, most active stock option, you will get the
No, but see, problem is if you have your own favorite list, you will anyway watch that. Then that list of 5 is something completely different. How many will you watch? They are the favorites of the market. That's it. Yeah, and they are all high beta stocks. Yeah, McDowell. All these stocks are high beta. That is the first criteria for trading. Which stock to select in options? They should be high beta. The names I told are high beta. Tata Steel, DLF, SBI, Hindustan Lever, ONGC, Tisco, yeah. No, HUL gives a good move, not every day, but it gives a good positional move. There is one, he has gone. TCS, yes. But then see, I'll tell you the problem in trading IT stocks in options. A lot of things depend on what happens overnight in the US. There are lots of gaps ups and gaps downs. So in options it is risky. Unless you have a clear view in terms of some other theory, Elliott wave or whatever, that also can be a view, so then you are safe. But it happens so many times that you are long in TCS and Nasdaq has crashed and TCS opens gap down. You can imagine how much the call loses value. So it's better to avoid. Bank Nifty calls options are bad, not bad, they are good. No, if you do this intelligently, you can make more money in buying. Yeah, naturally, because in writing calls, you have already limited your profit by at what price you have written. Even it becomes 0, you have written at 100. That's all. You don't get anything more than that. Here, 5 can become 100 in buying. Currency, I don't watch currency at all in terms of options. And sorry, this is enough. If you trade this is yeah, you're trading this for rupees. No, time decay, I said in the beginning, time decay and all that is already factored in this chart. Those targets are as per the chart, so the time decay and all that will be ignored. Those targets will still be, so once it crosses 45, 65 will come. That is from my experience. And then you should do book partially. If you, let's say you buy 2 calls, 2 lots, you buy one, sell one at 40, and then you are not bothered about the one which is already, everything is in profit. Yeah, solid line देगा. Wholesale, Dubai का wholesaler.
They divide by 15 and not operating. Yeah, currency.
DJ, where is DJ?
In 3 by 5, there are, can you hear now? In 3 by 5, there are two problems. If you don't have a move immediately after the trigger or a reversal, call will lose value. So you have to follow the call chart. What has happened, like recently, you know, those whipsaws which you saw yesterday on 3 by 5, that is all because of call writing. So if you go long in a call, you know, let's say you go long, when the first buy came around 56.50, you buy 5700 call. It is still a buy, but 5700 call is zero. So it's difficult to trade options on a daily time frame. Better to have hourly or 15-minute charts. Unless you have another value view of the whole month based on elite wave or some other theory. Okay, now there is a break for 15 minutes for tea.